And good afternoon. Welcome into Market Talk here on this Friday, March 5th. I'm your host, Jesse Allen. Great to have you with us. MarketTalkAg.com. You can find us, our home on the web, MarketTalkAg.com. You can also find us on Facebook, Twitter, Instagram. It is all at Market Talk Ag. You can find our great radio affiliates listed on our website as well. It's all at Market Talk Ag is where you can find us and learn more about the show. Very excited to have on with us here today. Joining us, he is the VP of Market Intelligence with the United Soybean Board and the US Soybean Export Council. Mac Marshall is with us. And Mac, how are you today, sir?
I'm wonderful, Jesse, and thanks for having me on here. It's a beautiful day here in St. Louis, and just thrilled to be part of the program.
Well, Mac, I appreciate you being on once again. And I think just to start, let's look at soybeans in general here as we get into this first part of 2021. And obviously, we've seen a very bullish soybean market here as we have worked into the first couple months of the year. And when we ended 2020, we started to see that bullish rise in soybean prices. Exports have been strong. We've been crushing at impressive rates as well. What is just some of your general thoughts about where this soybean market is at currently? Can you talk about that?
Well, let's start with where we are from a historical standpoint. So this year, we are at an export pace, or excuse me, an excellent export pace that's record. The high water mark we've had in the past is 16-17 marketing year, obviously before the trade war, where we shipped just under 59 million metric tons. And as far as commitments this year, we're already past that. USDA is saying we're going to have over 61 million metric tons exported. It's 2.25 billion bushels, more than half of this year's crop. So it's really been a phenomenal driver of the price appreciation we've seen since August, really. And, you know, the fundamental driver behind that, if you're just looking at the markets and the notable buyers, has certainly been China. China's come back in the market in a huge way since the signing of phase one, which entered into force just over a year ago. But of course, that was not during our peak export window. It was really kind of after the tail end of that for the prior marketing year. But this year, it's really been a phenomenal boon for our export complex as a whole. And, you know, as more and more demand has been felt overseas, and I called out China, but there are definitely other markets that we can get into as well. That's done a lot for easing what looked like and what was over the past couple of years a bit of a local supply glut, and really brought down those inventories, created a lot of supply tightness, and driven prices appreciably higher, certainly relative to where we were in August.
Well, Mac, you talk about prices rising and the tightening of stocks, and these are numbers that we haven't seen in a very long time. I think back to 2013-14, probably the last time we saw soybean stocks as tight as they are. And looking at, you know, where things are at right now, some folks are thinking we could tighten this carryout number even more, tighten our stocks up even more here over the next few weeks and months ahead. What are your thoughts on just how much we're tightening stocks right now and what that outlook is like moving forward?
Well, the next benchmark that we have, or at least the next part of market information that's going to be really germane for us answering that question, is on Tuesday when we get the next WASDE coming out of USDA. Just for the audience to recall, right now USDA is projecting carryout of 120 million bushels. It's under 3% stocks to use ratio, under 10 days utilization. And as you said, that is the tightest since the 13-14 marketing year. Now, I always like to look at historical analogs, so I think it is rather convenient that we have 13-14 when, you know, we were under 100 million bushels in carryout at the end of that year. Of course, that was against a smaller demand base, because obviously demand has grown pretty significantly in the last 7 years. But that also prompted a lot more area coming into production in 2014. That was the first year in which we structurally crossed 80 million planted acres of soybeans. And I think, you know, you look ahead at what the not just what the old crop futures are doing, but the new crop futures, and those are, you know, trading around $12 a bushel. You know, pretty significant spread between or inverse between where we are for, you know, old crop and new crop, but, you know, very, very significant. That's incentivizing more area to come into production as well. Now, you know, if we have that additional tightness, you know, certainly with the robust export pace that we've had, it wouldn't be surprising to see upward revisions to that. It also wouldn't surprise me if USDA just held it, because the figure that we have there is, of course, a record right now. But if we do see any additional, uptick in exports, crush has been running really strong as well. Not to discount what's happening on the domestic side, but yeah, I mean, there's certainly the potential for additional tightening there. And as we look towards the rest of the season, we want to make sure that we're continuing to supply a global and a domestic market.
Well, Mac, looking at the global side of the equation, we're starting to see more of that demand shift to South America here as we get into the month of March. But, still plenty of opportunities for U.S. Commodities. But obviously that demand shift is affecting our markets. We also have a WASDE report here for the month of March coming up next week. And we have planting intentions later this month. And those are milestones that are really all kind of playing into our market trade. What do you make of just the current global spectrum and some of that shift in demand to South America?
Well, I'm a football fan, and the football season is not just September through the Super Bowl. It's a year-round sport where there's always things to follow. And commodity markets are no different, because as we work in a globally traded commodity, it's not just what happens during our growing season in the U.S. We have to watch the dynamics that are happening out of South America as well. It's been reported, very often through the last several months about potential production disruptions in Brazil and Argentina. Brazil, of course, got off to a very, very slow start in planting, and that has carried through into harvest. Harvest pace, at least as at the end of last week, I think about a quarter of the crop had been harvested, well below historical norms here. So that's kind of truncated at least the front end of Brazil's peak export window. Normally in January and February, you see pretty significant tonnage movement in February, more so than January. But last month for February, I think the Brazilian Ministry of Economy said they only exported 2.9 million metric tons and only 80,000 in January. Well below prior year levels and well below what the historical averages are. But the expectations, I think, even with the harvest delays and some wetness, is that there's going to be a large crop coming to market. It's just a question of the pace of how that gets off the field and eventually to the ports here. And with Brazilian infrastructure and everything, there are always going to be delays around that, and each element of that does add I think a overall prevailing sentiment of additional tightness in global markets for soy. Now Argentina. It's been very, very dry down there, and the expectation is that it'll be a smaller crop than was originally expected. If we go off the USDA figures, I think back in September, they're projecting 53.5 million metric tons. It's down to 48 now. That could conceivably get revised again on Tuesday. We'll see. That's definitely one of the key things I'll be looking for. So there's just kind of this international tight position here, and I think with each successive round of delays, or if there's reductions in the expected crop size out of South America, that's obviously going to factor back into international balance sheets and has the potential to make things even tighter here in the U.S.
Well, we talk about global markets, Mac, and obviously China has been a big factor in our markets and our exports here recently, and always have been, but really been picking up and ramping up the purchases the last few months. And obviously, we've sold a lot to China, and we've almost hit that USDA target that we need to sell to reach our goal that USDA has set for this marketing year. But now we got to ship it. What are your thoughts on the shipping pace of exports to China and other countries right now?
Well, it still continues to be pretty aggressive, although we're reaching that sort of seasonal tail off, which is expected. I mean, these export sales figures, volume was up from last week, but still not what it was early in the season, and that's entirely congruent with seasonal factors. But we're still remaining and keeping about a 12%, 11 to 12% spread in terms of pace relative to our record pace in 16-17. Total commitments here. We're getting close to that 61 million metric ton export forecast that the USDA has. And then, which is why I think it's also critical to look at the open sales that are still on the books for the balance of the year. China has converted many of its open sales throughout the year into accumulated exports. And now I think we're only at just over maybe a million metric tons that are committed but not yet exported, 1.3 million metric tons. But looking at some of the other markets, we've got a lot of open sales for a number of other smaller markets that are still pretty material here. In terms of outstanding sales, I mean, Mexico is a critical partner to the South and is always, top 3 destination for us. We've got, pretty ample growth in outstanding sales, that haven't shipped yet relative to last year. Other markets as well, like Indonesia, Taiwan, Malaysia, some of these, huge centers of overall structural long-term demand growth in Southeast Asia. We've shipped a decent amount to them already, but those markets are, I think what's going to carry us through to that export figure over the course of the balance of the marketing year.
Well, Mac, obviously China, a big export market for U.S. soy, but, looking at that weekly export sales report, we're seeing a lot of other countries pop in there that are, working to get U.S. soybeans and U.S. soy products here. And looking at all the different countries that are out there outside of the major ones, can you talk about what U.S. soy is doing, what the United Soybean Board is doing to get into some of those other markets that aren't maybe the big headline drivers that we hear about constantly, like China?
No, absolutely. I think one of the critical initiatives that we've undertaken from a USB and USEC standpoint are, looking at our soy excellence centers globally. We've got one in Bangladesh, and that certainly helped really drive and an increased appreciation for U.S. origin product. Now, Bangladesh has changed their tariff structure, so it was a great growth market for whole soybeans. Now they're preferring to import soybean meal. But I think that's one of the great things about the soy complex that we represent is we're providing solutions for whole protein and advancing animal agriculture in many of these emerging economies globally. So still purchasing U.S. soy, which is pretty fantastic. Looking at some of the other markets, they're germane for this season, but I think still also matter from a long-term perspective. Let's call out Egypt. I mean, Egypt in the past 20 years has grown its poultry production. I think it's actually doubled over that point in time. And you've seen this really interesting progression where it went from being, primarily a soybean meal exporter a soybean meal importer. And, as its local animal agriculture has continued to grow, it's also spurred a whole lot more investment in crushing, which has allowed a transition to be more of a whole soybean importer. So that's really where we've seen the growth over the last couple of years. And now it's absolutely a top 10 destination for us. And that doesn't happen, if you're not out there, executing knowledge transfer, doing marketing and promotion, and helping with capacity building as well. And that Egypt story you see replicated in other markets as well. For us, certainly Thailand, Vietnam, Bangladesh, I mentioned before, Pakistan. Really all these major markets that are continuing to evolve and grow and experience more economic prosperity. And incumbent in that is also a greater appetite for animal protein, and that's why for us in the soybean business, we're well positioned to serve and supply that, and you certainly see that evidenced in the numbers, and I think more importantly in the quality of life in those countries.
Mac, what about the world vegetable oil market? Can you speak to the explosion in the prices there? We hear about soybean oil and canola and vegetable oil and all of these things working together and really just huge price moves here recently. Can you speak to that explosion in our world veg oil markets?
Yeah, the whole veg oil complex, because you really can't think of one vegetable oil in a vacuum. You have to really think of them as kind of an aggregated stack there. Now, there are differentiated preferences, by market, for palm versus soy versus, canola versus sunflower, and they have different applications, different taste profiles and everything. But, they do kind of move in concert in terms of price, and, blenders do find some degrees of substitutability to a degree. So, they all move together. But where we are right now, there's tightness really through all four of those oils. Palm oil, I think over the next couple of years in Malaysia and Indonesia, which are the major producers, expected to be some declines in production, just due to the way the tree cycle in terms of production goes over time. And then, there's tightness in Ukraine and the sunflower crop. Canada's had some tightness in its canola crop as well. So all that's been, helping buoy the complex. And then on the soy oil side, I think we closed last week at 51 cents a pound, highest in a very, very long time. And, that's driven by a couple factors. So one, this past year, I like to emphasize the role that soy oil has had as a feedstock in biodiesel. Now, traditionally, it is the number one feedstock for biodiesel applications in the U.S. But this year, as other feedstocks have, had supply pain points throughout the year, and really I'm pointing to the grease markets. In the second quarter of 2020, when there was a significant reduction in slaughter because of COVID and restrictions there, the availability of white grease from that channel, had some pinch points there. But over the balance of the year, if you think about yellow grease, which is also an important feedstock, reclaimed cooking oil, those are also seeing really high prices now, and it's an availability issue. A lot of that comes from the hotel, restaurant, and institutional aggregate sectors, and people aren't traveling as much, people aren't eating out as much, just to really overstate the obvious of the last year. So that's decreased the availability of that as a feedstock, and soybean oil has really kind of taken up more of the mantle there. The other thing is, which might sound a little odd, is okay, well, that's energy consumption. Gasoline use is down and everything. Well, it's a diesel application, and while cars on the road, passenger automobile traffic might be down during the time of COVID, we're still, have transport and long haul trucks moving around the country all the time. I mean, I get a lot of packages delivered, and maybe not the last mile delivery there, but certainly everything leading up to it in terms of interstate commerce is working with a diesel system in many parts of the country that's also driving for biodiesel.
Well, Mac, before we wrap up, can you talk a little bit about livestock and how that plays into our soybean exports and our soybean markets? Obviously, looking at different issues like African swine fever and PED virus in China and other parts of the world, and worries there that we might see a reduction in the need for soybeans and soy products as feed. Can you talk about where the livestock industry is at and how that, positively or even negatively impacts what's going on with soybeans and soybean exports in general?
Well, I think you called out the biggest one, which has really been a driver over the past 3 years, and that's of course African swine fever. It really impacted pork in China, or rather hog production in China, in 2018 onward, and they've been going through a herd rebuild, which has been great, and I think it's been at an aggressive pace that probably anyone outside of China wouldn't have expected. But now I'm starting to hear some renewed concerns about small ASF outbreaks. I think there were 6 pigs discovered the other day. So and that certainly is something to watch out for. But in a market where information can be somewhat opaque, I do like to look at some of the other numbers around it to triangulate and really understand it. And one that I'm focused on that's obviously very soy-centric is what's the pace of new crop sales for 21 and 22. So obviously there have been a tremendous amount of purchases for this year. We've seen those, be open sales. We've seen them actually accumulate and see movement of physical volumes. But through this point next year, or this point, as we're looking at bookings for new crop beans, we're approaching 5 million metric tons, and a lot of that's coming from China and unknown, which typically does wind up being China. This week China contracted, I think, 168,000 metric tons of new crop sales as well. And just for a point of comparison, you look at this point last year across all markets, we were under 400,000 metric tons committed for new crop beans. So I look at that as I think a favorable indicator that even with some of the noise that's going on around ASF in China and some of these smaller outbreaks that are happening, that herd rebuild structurally still remains generally intact. intact. The other market that I do want to call out where it has been a little bit of a headwind for us, particularly on the meal side, is the Philippines. There's been ASF issues there. It's our number one overseas destination for soybean meal. Our outstanding sales there, I think, are down a quarter, which is right in line with what the production losses have been this year. Certainly, we're hoping that the Philippines can, experience an ample recovery. Obviously, not just for soybean sales or soybean meal sales, but really for the benefit of that economy. And then, lastly, since you called out Europe, Germany had those ASF outbreaks earlier in the year. Maybe in the fall, I think, where there's some feral hogs, and then China effectively shut off imports from Germany as a result. Now, up until that point in time, as China's tried to rebuild its herd, and that means holding back breeding stock from slaughter as well, and been importing a lot more U.S. pork through the tail end of 2019 all the way through 2020, and imports of U.S. pork were starting to tail off a little bit as they were getting that recovery. But then this issue hits in Germany, cutting off Germany as a source there, and that's meant a resumption in ample U.S. pork exports to China. So that's been really good too. Again, from a soybean perspective, because naturally, pork exports that are coming out of the U.S. are fundamentally fed with U.S. origin soy meal. So that's been a positive as well. But certainly, we want the world to really get past ASF as we do COVID, so we can have a return to a somewhat more normal way of life and a higher degree of predictability in markets, to the extent you can have predictability in commodity markets.
Well, Mac, I couldn't agree more. Hopefully we'll get back to some normalcy. I know folks are hoping for that, and hopefully get back to some normalcy as much as we can in our commodity and livestock markets as well, and our trade. And I know folks can learn more by going to unitedsoybean.org or ussec.org to learn more information about what you guys are doing for soybeans and our export markets and more here in the U.S. And Mac, I appreciate the time. Thank you for joining us here today on Market Talk.
No, thank you very much, Jesse. And if I may add one more plug, we're doing a U.S. Soy WASDE webcast on Tuesday evening following the release of the March 9th report. So we do it after every WASDE, and this month's guest will be Emily French. She's a fantastic commentator. Looking forward to a conversation with her about the major things in the WASDE, where of course we'll be looking for South America and seeing what happens with global balance sheets.
And where can folks find the link to that webinar?
Sure, that is on usec.org and ussoy.org.
And there you go. Definitely sounds like a great webinar to attend. We'll post the link up as well at markettalkag.com. Mac Marshall with the United Soybean Board and the US Soybean Export Council, Vice President of Market Intelligence. Thank you for joining us here today on Market Talk. I wish you a great weekend, and we'll have to have you back on the show soon.
Looking forward to it, Jesse. This is a real pleasure. Have a great day.
All right, that's Mac Marshall with the United Soybean Board and the US Soybean Export Council joining us here today for a special edition of Market Talk. You can find us markettalkag.com. This has been the Friday, March 5th edition of the show. I'm your host, Jesse Allen, wishing you a great weekend and have a safe Friday.